Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, September 25th, 2019. For members of the site, this is really just going to be a brief recap of the market analysis I did in today's the second video today, the one that came out this afternoon. Although in that one I covered Treasury bonds, gold, platinum, all the precious metals, in addition to the markets. I'm not going to get into depth in this one. We're going to focus only on the equity markets. I may touch on treasuries only because of the whole correlation there with the risk on risk off assets and how they both hit my price targets perfectly today in reverse. So let's start out by going backwards. We'll go to yesterday. This is the post I made midday yesterday on the site. I covered this in yesterday's market cap too, my trading plan, NQ, ES, and RTY, and we'll just look at that and see what happens since then. So on ES, I had us coming down, testing the top of the same support zone that I've been talking about on SPY. That level is 294, I believe. And on ES, here it is. It runs out to about 29.46 or so. And I said I'm favoring reversal off the top of that, on or around the top of that zone, depending on where NQ is at the time and how the charts look. So that was then. Let's look at what happened. You can see I had us kicking up first, forming a little flag type action, and then another leg down. That was yesterday. And today, this was right here. So you can see that's exactly what happened to the penny, even the kickback rallies. We were right there when that trading plan was posted. We went down, and then we came in a little shy of the top of the zone. I'm going to talk about that here because SPY actually hit the zone, and I talk about that all the time, that if you are an ES trader or an NQ trader or you trade XYZ, it doesn't matter. If you trade the indexes, you want to look at all of them. If you're a futures trader, you should watch the ETFs. Why? Because the institutions and the majority of traders trade during regular market hours when the market's open, and a lot of them use SPY, even institutional traders. And so therefore, if you're trading ES, and in this case, it came a little shy of the actual top of the August trading range there, and SPY, which it did hit the top of the trading range, you're going to get the reversal if the SPY traders step in and buy, which is exactly what happened today. So that was ES. Let's go on to the next one here. We had also NQ. Said I was targeting the 76, 70, 50-ish support level for reversal in NQ, meaning tradable bounce reversing from a short to a long position. Slightly above that level, plus or minus, depending on where ES is at the time. Had a kickback rally. I was coming down to 70, 67, 70, 50. That was then. Let's find now. And there it is. It really doesn't get any closer than that. There's that 67, 70, 50 level. You can see we hit it almost to the button, a slight overshoot today. But again, that target was met, and that's where the buyer stepped into. And as I talked about, and I'll get to in the QQQ charts as I did earlier today for members, that's a very significant level. I'm circling all the reactions along the way, and this was, I'll call it Gap City on QQQ. We had just tons of gaps defining that level there on QQQ, the comparable level, which we bounced off today. And so that's it. And where do we go from here? I'm going to get to that in a second. I'll start now. I had it on ES, downtrend line on ES. I have downtrend lines here on NQ. I'm going to speak a little more to this when I get to the charts of QQQ and SPY, the index ETFs. What I told members in the earlier video is, let's see how we close and follow up today. The buyers stepped in exactly where they should have stepped in, where I expect them to step in. And as I said, if I was an institutional trader, investor, long-term investor, whoever, I had a longer-term bullish outlook on the market, I would have stepped in at QQ or SPY 294, and they did, and they bought it up pretty aggressively there. But as I'll get to in a minute, it hasn't changed anything on the longer term charts, the daily charts, the weekly charts, as far as the technicals go. It was a heck of a impressive rally, but again, they rallied exactly where they should have rallied. And I talked about this as well. We had a small divergent low as well. We had positive bullish divergence when my target was hit today. all the more reason for a rally, just like we had a small divergent low there the other day. Small divergence equals small rally. Big divergence usually equals big correction or reversal. So you can see all the other divergent highs in the past. There was one there as well. Let's look at the next one up. Oh, and before I walk away from this one and get to RTY next, that's pretty good resistance coming up here. You have a downtrend line right there, and you have a comparable downtrend line on some of the other indexes as well. And you also have a fairly decent price resistance level right there at 78.53. And as I'm going to get to in the daily charts in a second here, as impressive as today's rally was, and it could certainly keep going. You know, like I said, this is where the longs and the bulls should have stepped in, especially if the market's going to new highs now that we back tested the trading ranges from August. However, when you look at the technicals here, before I get away from the NQ 60-minute chart, this is what we had. We had a bearish rising wedge pattern with a divergent high, negative divergence. Pretty big divergence. As I say, divergence is the correction is usually roughly, not always, but usually somewhat commensurate to the scope and the size of the divergence. You know, you have relatively small divergence, relatively small correction, relatively small divergence right there, relatively small correction. Bigger divergence, so far a longer correction. These were sharp and swift, but they were over and then we went up. And what we're doing here, if you back away all these trend lines since this divergent high and then the subsequent breakdown right there, we have been walking lower in what we call a near-term downtrend. Prices have been making a series of so far lower highs, as I just showed you there, and lower lows. That is the definition of a downtrend, just like an uptrend is a series of security making a series of higher highs and higher lows. So let's recognize it for what it is. We're coming up on a downtrend line that it's a minor downtrend line, few reactions, but it could come into play. And so again, we'll have to see tomorrow if there's follow through here or if this was just simply a technical bounce, because the chart certainly indicated it, you know, as I just showed you well in advance. Okay, and the third chart I shared in that post yesterday as well as the video last night was RTY. Looking for a target of about that 15, 28, 50 level right there. First a kickback rally yesterday, then another thrust down, and then a reversal. And you can see a downtrend line there. That was then, and this is now. There was the kickback rally right there, as expected. And traded, and then the next leg down, traded down, covered long or covered shorts, reverse there, 15.28, 50. And now there's that downtrend line I showed you, and I added it since I just showed you on ES and NQ, the Nasdaq 100 futures. These are the small cap futures. So there's something to watch, and like those, you know, here's the current trend right now. Despite how much we went up today, the current trend is near-term trend is bearish. Now it can all change. You know, breakout of the trend line won't necessarily change the trend, but it will once you start taking out those previous reaction highs. So that's what we'll look for. So there it is. So even if you take the downtrend line out, you have resistance here at about 15.68. Pretty decent resistance too on RTY small cap futures. And of course you do have a divergence. You had divergence there, and then just like ES and NQ, you had this smaller divergent low when my price targets were hit, which was the catalyst, the technical catalyst for the rally there today. Okay, now we'll look at the index ETFs for those of you that trade those. And again, whether you trade the futures or not, I think it is a huge mistake to not keep, run separate monitors or however you can monitor, to keep an eye on different charts and watch QQQ even if you're an NQ trader. Why? Because again, this is where a lot more trades happen on QQQ than happen on NQs. And so what you have here is a buyer stepped in today at what I call Gap City. We have a gap right here, and there's a lot of reactions there. Huge gap right there, and a lot of reactions above there. Another gap, another gap, another gap, and another gap, and also not just gaps, lots of reactions along their way. And the gaps also, are technically significant. And that's about the midpoint of the trading range. And QQQ, we had just like SPY, pretty much a hard ceiling on the top of that range, where every time we got up to in August we were rejected. But QQQ made a series of higher lows, so the range isn't an equal midpoint, but that's the level I had, and that was 186.25 plus this downtrend line. I had to modify this slightly today. It's a little different from the chart yesterday, but the 186.25 level was there on the previous charts, and we kissed it to the button. And so again, the bounce was technically induced. Fall down to support, divergence on the futures, and there's that trend line. I posted this shortly before the close today in the trading room. Somebody asked where my next resistance levels are, and I said, and I posted this chart a little before we hit it. Yeah, the downtrend line, or actually we're right at it. 190.20 is price resistance. You can see there. That's a line that's also, I believe, been on the chart for a while now. A lot of reactions along that level too, and also downtrend line resistance. So let's see where we go. I favor a pullback from here overnight, and it could be more. We're going to get to the daily charts in a second. We could break out. In the video I did for members, I said, look, my convictions on where we go from here are not very strong, so I'm going home light today. Taking my swing trading account or active trading account. Going home pretty light. Let's see what happens tomorrow. Let's see if this move sticks. That's QQQ. Let's look at SPY real quick. And there it is. SPY, here's the top of your trading range from August and early September. And I had the line at 294, but you can see here, we had a couple spikes a little above that line. That's just rounding off. There was a high of 294.24. Today we came down to a low of 294.33. So you're talking 9 cents on a 300-point security. Statistically insignificant. That is a tag of support. And as I always say, and even more so, let me emphasize this, even much more so, you want to step in and cover your shorts early or go long early if that's your target. If you're targeting 294, more so in this case because all eyes, a blind technical analyst could see this level. It's so obvious. Everybody was watching this level back in August and September, so everybody was looking to buy it or cover. And again, whether we take off from here and off to the races, or we come on down through it, that's yet to be seen. And I will tell you that I am, I'm still leaning I'm leaning towards it being taken out soon. It's just a matter of how soon. How much more upside will be left after today? What I can tell you factually is that we closed right on downtrend line resistance. It's the same comparable downtrend line to QQQ that I just showed you. About 297.50 is the resistance on there on SPY. So we closed at resistance, and again, just a technical bounce. PPO trend indicator still below zero. We were oversold. There were a lot of things that said we'd get a bounce. Now the big question is where do we go from here? So the onus is on the bulls to pick it up and run from here. Break the S&P out to new highs. Remember, these last two highs were marginal new highs, ever so slightly. And like I said, I refrain from using the word bull trap, although technically if you want to say it, yes, because you broke the new highs. But we hardly went above there and quickly fell back down, so there weren't a lot of buyers to be trapped, if that makes sense. The whole essence of a bull trap is when you have a lot of buyers step in, buy a lot of volume, and then the security turns around and falls, and they're underwater quickly, and then they start to stop out. So you'd hardly had not a lot of buying on those two pops there. So we'll see what happens. Now let's go to the daily charts. This is what I want to talk about. All right, so we already had our divergent high in SPY. We had a divergent high right here. We corrected, went up, made a marginal new high, and only extended the divergences that have been building for quite some time now. We've pulled back. We made that, like I said, I favored at least a back test at 294 level. If we happen to go to a new high, everything I was saying a week or two ago still applies. The upside, I believe, is limited because any new high will simply be an extension of the divergent high. Now, when I say nothing really significant happened today, All right, so we, other than hitting the 294 and the expected bounce reaction off that level, we just recently had a bearish crossover. I talked about those the other day, the PPO crossover. You put up the histogram, and I talk about these, what I call hills. When you have the clean separation here, these hills, you get a bearish PPO crossover, especially in conjunction with things like divergences, a trend line break, and those are pretty good sell signals. So that sell signal is still intact. And so as much as the reversal was off the lows today, SPY only closed up 0.59% and didn't change anything, nothing on technically on this daily chart, or of course the weekly charts. It could, we could certainly continue up from here, and that's, again, like I said, we'll have to see what happens tomorrow. Let's look at QQQ. So I keep modifying this trend line depending where we're at. So this is where I like it right now. There's the lows on December 24th. We come in real tight, catch that reaction low from here, that big red candle on August 23rd. We catch the bottom of yesterday's candle, and then we had a stick save today. We had an intraday break, and this is why I continually say, if you're trading on a daily time frame, all that matters are your daily closes. Anything can happen intraday, and an intraday break. So the skinny part of the candle, that candlestick shadow, when it's down below, you call it a tail, or shadow on either side, tail below, wick above. That doesn't matter. That's what happened intraday. Prices managed to close back up to the trend line, and so they keep this trend up intact. So I talked about the very near-term trend being bearish. This is your longer-term trend right here. So far, a series of 1, 2 higher highs, 1, 2, 3 lower highs. And like I say, it's almost coin toss odds, I would say, whether QQQ is going to go on, as I've been saying now for a couple weeks, push on, make a marginal new high. So far the techs have been very weak, weaker, I should say, compared to the defensive issues in the S&P 500, which already made a new high at this point. So if we do, back here last week I was saying it was about maybe 2-3% upside from this point, because we went down a little. We've corrected a little since then. So now you're talking maybe 3 to 4%, maybe 5% upside. But it would, again, doesn't guarantee that this whole wedge plays out, but it would not change anything from a technical perspective. If we go up there, this is just another reaction off the wedge. You'd have another push up. That would be another divergent high. I'll put DH right here, divergent high, and expect a reversal. And more importantly, this wedge is getting very ripe. It's getting to the point where a rising wedge will break down. Bearish rising wedge or a bullish falling wedge pattern, they typically break out. This is price about 70 to 80% towards the apex of the wedge. And apex is where, if you extend two lines, where those lines cross. So you don't break out, right at the apex. Typically, this is a sweet spot in here, right here. And so we are now entering the sweet spot of this wedge pattern. And remember, that upper line is simply a divergence line. Doesn't matter to me if I have to drag it up here like this, because it's just showing you the divergence. And then you can see down here as well, when you look at the PPO, see those lines cross, and they're still bearish. I don't need to put up the histogram, but I will for you just to show you. You still have that crossover right there, well intact. So like I said, despite a very impressive intraday reversal, it doesn't change anything technically right now. We've still held the same support line we've been holding. The near-term trend from this point is still bearish. And the longer-term trend is still bullish. So we'll just have to see where we go from here, and do they follow through. And it all starts going back to the 60-minute charts I start with. Do they take out those trend lines on those price resistance levels? If they do, then that's going to increase the odds that QQQ can go on and take out this previous reaction high, and probably that reaction high from back here in July. And then finally, I won't go into a detailed analysis on bonds or gold or anything else. This is a public end-of-day video. It's general stock market analysis. But Treasury bonds and the stock market go hand in hand. They're completely, in one sense, unrelated assets. A bond is a different asset class than a stock or an equity. However, they have an inverse relationship, and especially lately, it's been a risk-on, risk-off trade. When the market is worried or correcting, you'll typically see Treasury bonds go up. Institutions primarily flock to them to protect their portfolio. They move money out of equities into the relative safety of Treasury bonds. And when things look good, when it looks like smooth sailing out in the market, they sell Treasuries and move that money back into stocks. Now, what happened today was far from coincidence. So right when those targets that I had laid out in advance, the back test of the 294 level on SPY was hit, and the NQ targets, everything else, as I mentioned this morning, ZB Treasury, these are the 30-year Treasury bond futures, hit that key 163.70 support. Back here, I had mentioned being short the Treasuries. Technicals were there, and I was also hedging up index shorts, and that was a good trade. And then more recently, saying I was long and bullish, and said that you could buy pullbacks to this trend line here after we broke out, and we walked our way up that trend line. But recently we rallied right up to that 163.70, and it's a big level. A lot of reactions. That's where we broke down here. We back tested it. A lot of reactions there. And you also had divergence at the time, negative divergence on the indicators. And so exactly when the stock market reversed, so did Treasury bonds. And again, that's not coincidence, nor is it coincidence they hit these resistance levels. Now, let's look at TLT. For those of you, TLT is basically the same thing. If you trade ZB, it's a 30-year bond futures. TLT holds 20 to 30-year Treasury bonds. And it hit my second target today. So where's that from? That was a target that I laid out, what was it, over a month ago when we were down here. I laid out this scenario. Let's see, right here. And that was all the way back on September 13th. I said, here's a downtrend line. We needed to break it out. The Treasury was either going to break out, run up to T2 and reverse, or continue on down to this trend line, this yellow trend line, and the big gap support. You can see the big old gap right back here. And so I said you can either scale in down to this level, buy down to here, and of course, a breakout of the trend line is your buy signal, and then ride it up to 143.51, and then sell it. Or expect a reversal there. So that was then on what was it, the 23rd, a few days ago, I showed you that scenario played out. There was your move up. It said we're coming close to that T2 level, expect a reversal in Treasury bonds. I wouldn't have expected a reversal in Treasury bonds if I didn't expect a rally in the stock market. So this all ties in again together. It's all interrelated, and that's the takeaway from this. If like I say, if you trade ES only or NQ only, watch the other indexes, watch even the small caps, watch where they're reversing, although the large caps are much more important, and also watch Treasury bonds, because if you can make a case that Treasury bonds are likely to reverse, it strengthens the case you're going to get a reversal in the market. So we reversed right on that target that I had from back here, and broke that minor trend line. And now this is why I'm near term a little uncertain. That's a breakdown. There could be some more certainly could be some more downside in Treasury bonds based on the divergences and everything else. But this could also prove to be a big old bear trap scenario. Bear trap, trapping a lot of shorts on TLT if the index is reverse. And like I said, I won't bet it heavy, but I would put pretty decent odds. And I did say, that I reverse took some trades, some positions. I went home short, mildly short, because of the trend lines, like I said, that we closed at on the futures. I'll wrap the video up here showing you that's not it. Where's my ES? That's E7. Those are Euro futures. That's ES, but again, I'm focused more on NQ. If I can find my NQ chart. There it is. All right, so NQ has resistance just above at 78.53, so I'm willing to ride a little more upside in the overnight session, but I'd rather get ahead of it because QQQ closed right at that trend line resistance that I showed you, as did SPY earlier. So, and again, if we pop above it, we go up, but my guess is a little pullback first, probably in the overnight session, and if we gap up and run, tomorrow. Again, if you take home QQQ, you have to deal with a gap. If you trade futures, you don't have to deal with a gap because they're tick, tick, tick. They'll shut down a little, after the market closes, and then reopen again, and then trade virtually around the clock. So those are the levels to watch. And once I see whether this today's move can be built upon or not, if it starts to fail, I think that'll give us some clues. And then more importantly, we came very close to breaking these trend lines today. Intraday break, but we didn't have a solid sell signal yet. So those are the things I'm watching, along with XLK. As you guys know, I watch the tech sector. That's a big one for me. I could put a blindfold on for the rest of the market, only trade this chart, and still effectively trade NQ and even ES, because this is such an important sector, the largest weighting in both the NASDAQ 100 and the S&P 500. And you can see another stick save there, meaning an intraday break. Look at that candle. And boom, rallied right back off that trend line, same one I highlighted yesterday. So these are the things I'm watching, and we'll just have to see where we go from here. I'm seeing if I can get a little downtrend line off the highs there maybe. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.